Hello traders, welcome back to my channel. In this video tutorial guys, I'll be teaching you about Fibonacci strategy, but different from other videos. On other videos we were using Fibonacci based on time, where we were going to be looking at the previous day to predict the current day, right? So but now we are going to be using Fibonacci based on wave. I call it based on wave because immediately you identify high and low, you start getting into the market and place your Fibonacci, and then starting to make decisions, right? But if the high happens to change, it means you will change with it, right? If the low happens to change, you will change with it until the market closes. So in this strategy, guys, is different from the other because this one is based on wave. So you can use both of them based on time, based on wave, and see whether they've already took the decision or whatsoever. And also on the same video, but I don't want to make it long, I might teach you how to place Fibonacci stop loss, stop loss based on technical on the same strategy, because I did some of the videos, but on the same strategy I think I can also teach that if time allows us. So let us look at this wave, guys. A wave, guys, I call it is when the market reaches the highest price, creates the highest price, and already or obviously and a lowest price. So I just call it a wave. So it means that it has completed the first second. So we have this highest price, right? This highest price on the same day, right? And then this lowest price. So on the same day, guys, we are going to be using this wave, the first, our high and low, and see whether we can make decisions on the same day, right? So we are going to be using our Fibonacci retracement, and also um, I'm going to be teaching you about some of the Fibonacci's, which they are very significant. But this one, guys, is for entry only. It does not give you the exit. I'll be teaching you about Fibonacci, which gives you exit. So don't forget to subscribe to this channel and to like the video. So we're going to be using this highest price and lowest price. I'm not going to explain a lot of stuff. I told you that since the market moves from low to high, which means it's a buy movement, right? It's a bull movement. So we'll start from no, I inserted it. Yeah, it's correct. We'll start from it means that the numbers should be increasing, which means uh, start from 100 and then as it goes up, right? It means your low must be 100 and then your height must be 0. That's what you should do. So we inserted the Fibonacci, and then let us look at it. Remember, guys, this is daily, and I told you this. If it is daily, guys, the 38 and the 50 are useless, not useless, but it is not a strong zone for us. Strong zones are the 61.8 and the 78. These are our strong zones. So many people, the mistake that they make is that they don't know the difference between these numbers. There are some numbers, guys, they only work on they are strong on bigger time frames, like the 38.2. They are strong on bigger time frame, but smaller time frame like this, guys, it might end up going to 78.6. That's where normally for day traders they are looking at this level, right? They are looking at this level, the 61.8 and then the 78.8, right? And then I'll place another line probably for our next next strategy. I'll place this line. So for day trading, guys, we were looking at what? We were looking at the strategy. In this case, it was a buy. Our strong point, guys, it is the 61.8 and the 78.6. This is our strong zone for buying. Why do we buy it? It is because if the market was it was trending up, in order for it to continue buying, it has to come below. It must come down and take some buyers, right? This is the breathing zone of the market. It must come down and take some buyers and then start buying, continuing with the buy, right? So there's no one is going to buy here, guys, because it's the highest price. The market, it has to come down for buyers to come in. So everyone is looking at this level, at this zone, right? So it did came to 61.8. Look at the respect. The market did respect the Fibonacci, and then buyers started coming in, right? But it reaches what? It did reach also 78.6, which is our strong zones. I told you this is our strong zone. If the market happens to break the 100 line, it means that the trend has changed, right? It means that the trend has changed. So we'll look to enter a sell position in this case. So where are we going to place our stop loss? Where are we going to place our stop loss? Not just a stop loss, a technical stop loss, because some can choose to place a stop loss maybe here, thinking that okay, 61.8 it is very strong. Then I'll place my stop loss near 61.8 because I don't want to lose a lot. I want to multiply. I want to use a bigger lot size, and then look at what happened. The market it did trigger the stop loss. It means that the trade was taken out, even though it was a good position, but it has been taken out, right? Let me put the lines back. So I prefer to use a technical stop loss because I know that the market has an allowance to come here at 61.8 and the 78.6. I'll start putting my stop loss at the 100, guys, right? Knowing that if the market comes here and take out my position, I'll be looking to do what? To enter a sell, and then I'll close that loss because now I know the actual direction of the market. So I'll close the loss because the if you are using a technical stop loss, it means that you will lose less and stand to make more if you get in the real trend, right? So even if you are taken out, you are going to make money out of your wrong trade which you took. So in this case, guys, the market did bounce and then it did reach 78.6, and then it went up, which was very profitable for those who would have entered at this position. And then you will place your stop loss at the 100, right? And then the next day, guys, the next day did come back again and then retested the 78.8, and then it goes up to 23 and then down again. Remember, this one, guys, it does not show you the exit point. So stay tuned for my other videos where I'll be teaching you how to exit a tool which is very important, because in order for you to make money you have to know where you're going out to get in and to get out. So I'll be teaching you about those things. Don't forget to subscribe to my channel, guys, and to like. And again, I think we are done for today. This is how you should place your stop loss, guys. Don't just place a stop loss on any zone. Place a stop loss based on your technical analysis. In this case, look at how it did. It came back here and then it retested, and then some were saying this is a support, a resistance. I mean, this is a support line. So to some, this was a support line. So they started buying from here, from there, and all those stuff. So until next time, guys, don't forget to subscribe to my channel. And if you don't understand some of the stuff, you can send a message. I'll place my number phone below, or my email. Until next time.